Friends, I am so happy the election went the way it did, and the market out there is going straight up. It's going a little bit sideways the last couple of days, but it's basically going up in response to Donald Trump winning. There's so much winning out there when it comes to the stock market. It's easy to lose sight of the fact that we are on the edge of a financial precipice. A lot of the big problems we have out there that could cause a market crash are still there. In fact, there are some things looming on the horizon that the stock market hasn't even entered into their brains yet. They are not expecting these tariffs. They're not expecting the government cuts that are coming, and they haven't priced any of that in. Friends, the stock market is going to pull back hard, and when it does, you may see a bunch of dominoes start to fall. We're going to talk about banking issues. We're going to talk about the US dollar and the Brics. We got a lot of issues to talk about, but let me just sum it up in this, that the stock market is not ready for a lot of the stuff that's about to happen and is already happening under the surface. The big smiley face that you see on the stock market right now is belying the catastrophic damage to the financial system of the United States that is just beneath the surface. We need to talk about this. If you're in the stock market, you need to know these things. You need to know the risks that you're playing with because, we're all adults here. You can all make decisions, but so much of this stuff is not being talked about in the mainstream media. It's not being talked about in the Wall Street Journal. It's not being talked about in a lot of these CNBCs and these people talking about stocks and everything like that. They mention these things in passing here and there, but then they're like, but nothing bad's happening, so therefore it must not be a problem. I'm an accountant by trade, and I'm telling you, these things are problems. And they're not a problem until suddenly they're a really big problem and they bring catastrophic damage. All right, friends, let's jump into it. Welcome to the Poplar Report. If you're not familiar with that, I'm Steve Poplar, and we cover the things that the mainstream media turns a blind eye to, and right now it's the financial sector particularly. All right, so stock market's been doing good. I mean, granted, I am astonished that it is where it is. I'm going to be flat out. I've been telling you that we're potentially on the verge of a collapse in stocks for a while now. And some would call me a doom and gloomer. I'm just like, I'm looking at the numbers. I'm looking at what's actually happening. And these people with their unicorns and fairy dust come floating through and convince everybody to buy more stocks. And it keeps going up as long as more and more suckers get into the action. And that's what's happening. So what have they been chasing after recently? They've been chasing after the AI bubble, right? Artificial intelligence is going to replace all the humans. And as someone who has to mess around with AI for some of the things that I do behind the scenes here with the thumbnails and image generation, as well as some of the other things, I've looked into trying to get using AI to help me research things. And AI it's like a stupid 2-year-old. I mean, that's just what it is. I mean, it imitates some intelligence, but it just really isn't. And I get it's going to get better and better, but let me just tell you right now, most people's jobs, unless you're doing basically the exact same thing over and over again, like if you're a realtor, some tax positions might be under threat. Some legal positions may be under threat. Administrative type roles that are high paid, these type of things may be under threat in the near future, but it's not going to go after everybody's job immediately, right? So AI is supposed to be this utopia that's going to usher us into this new realm of nobody working, nobody having jobs, and utopia for the people at the top, and kind of like a dystopia for all the rest of us, right? Yeah, okay, that's way overblown, and yet it just drove the stock market like just vertical. Okay, And then they needed a new narrative, and just recently it's been, well, Trump has won. Well, it was Trump's going to win, and that drove the stock market up more, and then Trump won, and so that drove it up even more. And now it's kind of like it's starting to go sideways a bit, because I think people are starting to realize, well, it's not going to all be sunshine and roses, and, they're trying to process this. I think the next leg might be down because of that, because, they're taking into account the tax cuts that may be coming, but they're not taking into account the tariffs that will be coming. And the tariffs, produces a sugar high right now as people are racing to get their orders in to get their stuff from China before the tariffs come. It's going to impact a lot of businesses in the United States. It's going to cut into people's profits. And that's just the way it's going to be. It's going to take a realignment of where manufacturing takes place, and in the long haul it will be good, but not in the short term. And the second thing that they're not really taking into account is, like I said, Elon Musk and Vivek are, I can't even pronounce his last name, so he's just Vivek to me. They want to cut $2 trillion per year off the federal budget. Now, I don't think they're going to be able to do that, at least not in the first year and not in the second year. If they can cut, $1 trillion off the federal budget in the first 4 years, per year, that will be a miracle and a half. Like, that will be astonishing. Now, Elon Musk has landed rockets on towers, so I don't know. Maybe they can do things that I can't even imagine. But all that to say, $1 trillion less being thrown into all these different corporations, and that's where it usually goes to, these big corporations that are big members of the stock market, right? So a lot of these corporations are going to have a lot less income because they do all these services for the government. That means lower income means the stock market is going to have less profits, and it's going to be a pullback, kind of like recession style. There's going to be a hard adjustment here, friends. There isn't just go in and then just flip all the switches off and then everything's good again. It's a lot of these destructive things have had a positive impact on the wealthy, aka the stock market, and they've had a destructive effect on the individuals. They've been basically stealing money from all of us and forcing us to spend it into these companies and through the government into these companies. So when they cut that money, yeah, you and I are going to have more money in our pocket, but the stock market won't. And they're going to be impacted by that. NVIDIA is already seeing that their AI chips are slowing down in sales. So that's been part of the driving force of the AI market going up and up and up. Tech stocks are starting to pull back a little bit. Things like Amazon, they're seeing that people aren't spending as much money. Walmart's seeing people aren't spending as much money. Across the board, we're seeing a lot of these tech companies are seeing people canceling their subscriptions and everything like that. All this is pointing to a recession that's going to lead to the stock market coming down. The stock market is already pricing in getting all these free rate cuts by the Federal Reserve and all this free stimmy money, the stimulus and all that kind of stuff. They're expecting all of that, and because of that, that has to keep coming or else the stock market gets surprised negatively. And this is not even dealing with the bigger issues. We have much bigger issues that are serious, serious problems. People aren't paying their loans. They borrowed auto loans and they're not paying them back. People are borrowed up to the eyeballs in credit card debt at extreme interest rates, and they're not paying it back, and they're defaulting at higher and higher rates. People are just quitting on paying back their loans. This is bad for banks. We're going to start seeing that hit the housing market soon. People are locked into low interest mortgages, but increasingly more and more people are getting kicked over into higher interest mortgages or higher interest equity line of credits, or they're forced to move. And when they move, they get locked into a higher mortgage rate. And this is happening. Some people who made bad choices are in adjustable mortgage rates too, and their interest rates have come up. So we're going to see this hit the housing market at some point, but it's hitting the auto market. It's also hitting the commercial real estate. So we got all these office buildings that are vacant that nobody wants anymore because nobody wants to go downtown in these cities anymore because you have a tendency to get stabbed by some bum on the street, right? I mean, it's dangerous in these cities. If you try defending yourself, you're the one who's going to end up in jail. So nobody wants to go down in these cities. And then on top of that, nobody wants to go into the office anymore. Everyone wants to work at home. And so these office buildings are becoming giant liabilities for these banks. They're liabilities for the companies that own them, and then eventually they become liabilities to the banks because the banks have to seize them to pay off the loan that the company has defaulted on. And now the bank is sitting there with this office building that's not worth half what it used to be worth, which is not a good situation to be in. And it's not just that. The banks are sitting on billions and billions of dollars of losses on U.S. government debt. T-bills, treasury bills. These things have dropped dramatically in value, and the federal government is dumping more and more and more of these out on the market. They have to bring in more money to run the government, and so they're printing more of these savings bonds or treasury bills, right? And people are loaning them money. And this is sucking money out of the banks, but it's also making the treasury bills themselves worth less and less and less. Interest rates on those are starting to go up even without the Federal Reserve's okay. So the Federal Reserve is trying to lower interest rates. We started to see that these treasury bills are actually going up in interest rates. The opposite of what the Federal Reserve is, and it's just showing that the Federal Reserve is slowly losing control of the situation. And when they finally lose control of the situation, that's when we're going to have a massive crisis. When people realize that the Federal Reserve can't control the interest rate anymore, that's a day that will be remembered as a market crash day, like some of the worst in history. And we got the Brics out there, the Brics countries, that they're trying to get all these countries off the dollar, and they're getting closer and closer to that. When they finally get a viable substitute, or they're already getting all these countries, like China's been dumping U.S. Treasury bills. More and more, the people that own the U.S. debt are the Japanese, the Europeans, and Americans. American banks and American investors are the ones who have loaned the federal government all of the money. And when the government doesn't pay them back, and this is a hard word, if you're invested in treasury bills, I want you to be aware of this. There are people quietly talking in the background about how the United States just needs to default on our debt. And let me tell you what happens when we default on our debt. They look at everyone who has a treasury bill, and they look at them and they say, we're not going to pay that back. We're not going to pay interest on it. We're not going to pay you back. Or a less severe version of that is, all of this debt that's out there, we're going to pay 50 cents on the dollar for it all. If you look at your retirement accounts, if you look at where your investments are, if you're buying mutual funds and everything like that, a lot of times they have a bunch of money parked in treasury bills because it's free money. It's free interest. Yeah, it's free money until it's not. When Donald Trump, under the advice of Elon Musk, looks at everyone and says, we're just not going to pay that debt back. Will that have a major implication across the world? Yeah, it will. But in the end, only insane people think that we're ever going to pay back that debt anyway. to be just upfront and honest and just say, we're not going to pay back that debt, and we're going to clear that out right now, and we're going to balance our budget now. We're going to get rid of all that old debt. We're going to default on it, which is going to make it hard to borrow money in the future, for sure. But the United States would not be the first country to do that. It would not be the first country to do that this decade. It would actually join a whole bunch of other countries that have done that this decade. So that's not an uncommon thing to happen. Now for the United States, we haven't done that recently. But it's not unheard of. So the dollar, and then when we come to the debt, we have all these debts. We have so much money that is loaned to banks. Banks own basically so much of the United States. And all this debt isn't a problem until it's a problem. If you have more credit cards, you can just keep charging up more credit cards and it's not a problem. All your debt's not a problem. Until you get to the end of that last credit card and everything is booked up and everything is charged to the hilt, and you can't borrow another cent more, now suddenly your debt is a big problem. In fact, it's a crippling problem. You have just lost everything. And the same goes for the United States. The same goes for people who are in debt across the United States and around the world. All this debt doesn't matter until it suddenly matters so much. And the United States financial markets, the European financial markets, all the markets around the world trading stocks and bonds aren't taking any of this into account. It's going to be sunshine and roses, unicorns, and pixie dust forever. Well, friends, I'm here as an accountant, as a realist, telling you these things are going to matter. They're going to impact the stock market. And as I've been saying for a while now, the only business you really should have, in my opinion, in the stock market is to be shorting it. And that's a complicated, dangerous thing to do. So the best thing to do is really to be out of it completely. Look at alternative assets, silver, gold. Heck, right now you'd be better off sitting in cash, U.S. dollars. That's what Warren Buffett's doing right now. He has a massive amount of cash piled up. He's sold so much stock. He sold his banks. He sold his Apple. He sold stocks and everything. His major, his portfolio, as well as the portfolios that he manages of Berkshire Hathaway. People put their money in there and to invest and everything. And those assets are sitting mostly in cash right now. Warren Buffett thinks it's dangerous. Maybe you and I should follow suit in thinking long and hard before we jump all in. Okay. All right, friends. That's my update for you. Not financial advice or anything like that, but that's my take on things and kind of where I'm standing and what I'm seeing. Let me know what you guys think down in the comments down below. Thanks so much for watching. If you want to check out another video from this channel, there's one right up here. I'm going to put in the pinned comment down below, Genesis Gold Group. If you want to give them a call, if you want to just ask them some questions about what it would look like to transfer some of your assets over into gold, silver, or platinum, they can answer your questions, no obligations. That's down in the pinned comment. Thanks so much for watching. Steve Poplar of the Poplar Report, out.